Hello and welcome to another episode of Fintech Focus TV with me, Toby Babb. Today, absolutely delighted to be joined by Jane Loginova. Jane, how are you?
I'm very well. How are you, Toby?
Very good indeed, thank you. Very good indeed. Listen,
Good to be here.
really excited to talk to you about this. BPC is a very interesting company, and Radar Payments is in a space which I think has been, over the last few years, one of the most talked about and hyped in the fintech marketplace and arena. And I'm very keen to sort of get into that and see what's happening in the marketplace and your sort of view of 2020, which we say with a grimace, and what we can look forward to in 2021 at the same sort of stage as well. So, Jane, give us a little bit of background. Tell us your story and what's happening over at BPC and how that sort of fits in with Radar as well.
Yeah, sure. So, Jane Loginova, I'm a Chief Commercial Officer at BPC. BPC, for those of you who don't know us, is a payments company. We have been in existence for over 25 years, dominating largely Southeast Asian, Eastern European, kind of Middle East and African space from payments technology perspective. So we supply end-to-end retail payments functionality to banks, processors, lately also transportation companies, post offices, central banks, government, etc. So anything in retail spaces, nothing is within our reach. And Radar Payments is a BPC company or BPC initiative, which is effectively everything that BPC knows how to do in payments, but offered as a service. So we rolled out all of our functionality end-to-end in the cloud. And, in line with the market, we have seen a lot of demand for smart processor that would be able to deliver not just pure card processing to them, but also all the additional functionalities, all the innovative solutions, but as a service. And that's what Radar Payments is really. It's the BPC's 25 years of experience and BPC's technology, but in the cloud. And we have rolled it out to focus on Europe, where we see a gap in that perspective. Of course, there are legacy players like First Data, Worldline, Fiserv, FIS that have been, dominating the space, especially in the banking sector, but generally with the big players who have had a lot of M&A, public companies very much focused on their share price. There's been a lot of, I would say, negative feedback from clients, complaining about the speed, not being able to roll out the innovative solutions as quickly as their customers demand that. And I'm sure you know that the consumer has become very savvy in terms of payments. Sort of everybody wants to offer a plethora of payment acceptance methods. They want to be, they want to have a speed of processing to be quick. They want to be able again to offer the latest functionality to their consumers, to the end customer. And some of those, companies, they cannot deliver the desirable functionality, as quickly as those guys wanted. So for us, we are, I would say we are an interesting company from that perspective, that although we have, this 25 years of payments experience, so, for a new fintech, we can also be considered as a kind of legacy player. But obviously in the SaaS and the processing business, we are new. And I think the fact that we operate on our own technology and we have this global footprint, and ultimately, it's the same people who are in the company who will kind of in a way deliver this experience, but just on the cloud. I believe we have a niche to really go for it in Europe. I mean, we see an opportunity again in within the traditional banks. So currently, who would prefer to switch their provider for, the speed of service or the lack of innovative solutions. But then also there are a lot of new guys in the block, sort of a lot of fintechs, a lot of digital banks that are emerging, and they need to be serviced quickly, but from an end-to-end, in a way, payments provider, from issuing, from acquiring perspective, from having, again, like the more innovative payment acceptance method to be offered to them. So and that's is what we do, and we do it purely on a B2B basis. And actually the reason why we call it radar payment isn't kind of misleading, is that our ambition is to actually fly under the radar. So we would really just focus on providing the technology to our clients, so that they can only focus on their business development and then their consumers. So,
which is exactly what you want to have, right?
Yeah, exactly.
As it should be with people. So I find there's so many interesting things that you've just said in that sort of.
I guess it was quite a long intro.
But... No, not at all. I mean, I've been sort of collating various things I wanted to dive into, but it was fascinating. And from a commercial standpoint, and you sort of act as the CCO within BPC, this sort of fragmentation of the group is quite an interesting piece, isn't it? And there's obviously companies there who particularly as some of the companies you just mentioned there on an enterprise level will trade off their name and sort of have different fragments and products that go through it. And you've sort of taken a slightly different route with that sort of CCO on one side and co-CEO of Radar Payments on another. Talk to me a little bit about the strategic thinking, the commercial thinking behind that, and how you guys have set up.
Yeah, look, because again, we're still comparing, to the other guys. We're still a fairly small company. I mean, okay, we have 900 people, but we try to keep it very, lean and mean, and keep the circle quite tight. Because again, some people have been working in our firm from its inception, and they're still there. And what we want to actually avoid is to become a kind of fragmented company. We do have a few maybe separate brands within our firm, but again, one is, for instance, O-City, which is purely focusing on transport and smart city solutions, but at the core of it is the same payments platform, which has, again, just been deployed in a slightly different manner to address, for instance, account-based ticketing, and we now operate in Philippines for that. So again, for that particular angle, we have a separate brand. For Radar, again, we've done it just so that we can differentiate the processing. But ultimately, as BPC, we all have kind of as BPC and the people who work in BPC, everybody carries a multiple kind of hats. And I think that's our advantage, because that's how we can ensure that the experience that we have generated, doing, I don't know, one line of work in, say, I don't know, in Indonesia, can actually be easily transferred to, to France, where you would also appreciate that a lot of innovation is actually happening, in the East, right? So sort of in Asian economies, and then they come here. So for us, because again, it's the same people in the firm who own that knowledge, we can transfer it to the right opportunity. So to answer your question probably in a bit more concise manner, I would actually say that we're not fragmented. Purely from marketing perspective, we have identified a couple of brands within BPC, just so that we can really kind of go for those particular opportunities and people can identify us in that market. But otherwise, BPC has such a large array of kind of functionality in a product stack, which lets us be quite flexible as to how we deploy it, in terms of opportunities they will go for.
Absolutely. And look, you've got an interesting piece there, as you say, with a business that has dominated, Asian markets and such like, and coming over and sort of seeing niches within the European market with fairly, large scale incumbents who are there, at the moment. In terms of eating that market share and disrupting the marketplace, what's the route to that, and what's the sort of, I guess, sell to people who are looking at the product?
Well, again, I don't want to be repetitive, but I would say it's this, what we sell is exactly what I've mentioned. It's just that
Yeah.
by operating, in 80 countries globally, in 80 plus countries globally, and having such a wide product stack, we have the opportunity to offer all this know-how as a, on a cloud as a service. And we would go specifically with our pitches to go and specifically support, be it processors, banks, investor funded digital banks that want to get off the ground, and why go through the pain of hiring a army of IT developers if you can go to the company like, say, us, like specialists who have built digital banks. We have done digital time for Commonwealth Bank of Australia. I mean, now it's a separate entity, a time digital bank in South Africa. We have done we've been working with Safaricom. We have, the experience of working with tier one banks like HSBC. So we know what our customers need to deliver to their customers. And so that's our competitive advantage. And we still have, being nimble and not, being private as well as offers a certain advantage. We still operate in this kind of entrepreneurial spirit / fintech, culture. So we are laser focused on the customer rather than our kind of share price, and we can generate, the speed. Well, at least up until today, the speed that the customers want to see their projects realized.
You mentioned there the sort of, listening to the customers, and beforehand you've just, mentioned about the sort of expanding demands of customers in this digital age. We're saying, we're used to payments, in as many different varieties and as quickly as possible, and we become spoiled, I think, as humanity in terms of what technology has allowed us to do. So the expectations, I think, have never been more fierce in terms of what customers are looking for. You are not unique in this year to have seen a sort of shift towards services, and particularly sort of cloud-based technology alongside that as well. Tell me a little bit about this sort of shift towards services, and how I guess the sort of mindset of the customer is taken on board, and you're able to provide that sort of bespoke service to them.
Yeah, so I think the shift to to services had started a few years ago, and I think on a more consumer level, Salesforce was probably the first one that really kind of
Just thinking that, yeah,
that really identified that. And let's not forget that he used to work for Oracle, and so
yeah.
he saw how time and resource intensive all those implementation projects were, and so. Which is true. And I mean, for us, every kind of, I mean, we all sell that we are great, we'll deliver projects faster, which is, I still think we do it better, and faster than the competition, but it's still always a rather, painful process for all, right? So, and I think, and that's the, ultimately the key to the shift to services comes precisely from that. I mean, if you have the option to outsource, certain pain, especially if it's not if it doesn't form part of your business in a way, then kind of you would. So you would rather have the professionals who focus on that. Professionals who know their own software, and you rather pay them to make sure that they deliver you the service you want faster. And then if you have a problem, you always have like a number to call. Otherwise, you have to rely on your people for them to really understand the software that they bought and then know how to kind of operate it and upgrade it. And then if there's a fault, there's always like this pressure internally, and then the CTO is always his job is kind of always on the line if even if it's like you bought like a faulty software. So but I think so definitely we're going to see a high and higher demand for outsource, or or for different ways in a way of outsource, because ultimately let's not forget that going for cloud also gives you, as a client, you have many ways as how involved you want to be, because you can either outsource it fully, you can have it also as a managed services, like a platform as a service. So, so that there are different ways of how involved you want to be. But speaking kind of generally about the market, I still think it's going to be a long time until, if ever, until big institution go full outsource. I mean, HSBCs and RBSs and your typical tier one banks. I think they will not be comfortable for a very long time to have the payments to be fully outsourced. But the tier two banks, I think for them it's generally more about kind of customer service and the lower costs. They would, they are now. Majority of them, are using the SaaS or outsourced services. Yeah. And I think obviously all the startups, the fintechs, the neobanks, they will generally want to be going with the processing proposition, or rather banking as a service, payments as a service, but everything as a service versus versus spending time and building something in house. But then I think again, like it also becomes a question of scale. If they generally, when they become very big, they do people do want to have control of their own infrastructure. So,
and this is the classic sort of adoption curve, isn't it? Where it is a lot more cumbersome to change fundamentally in the tier ones, just because of the sheer volume and size, and you mentioned it before, the sort of fear of making a mistake and being sacked, which
tier ones are ultimately they're like that's precisely that. It's just that because of the regulation and the fines and the publicity that they get when a single ATM on a high street doesn't work, and then everybody's under fire. I mean, that's why really BPC as a company has spent a lot of time in replacing certain legacy providers of software, ACI, for instance, and also FIS. But a lot of the banks, especially like American banks, they would just, as much as they do talk about, upgrading the infrastructure, effectively they just don't. They spend masses, like millions of money on maintaining old, outdated piece of technology, but the risk of kind of any malfunction or during migration is just too high.
Yeah. And that's the fascinating bit for me, because there's I've been speaking a lot on this show about interoperability and this sort of ability to look at bespoke solutions that really suit the trader and suit the end user in so much better a course. Yet there's this interesting and perhaps necessary evil of not being able to move away from systems that have been implemented. They're just too important to be able to do that. So the risk factor remains high. But I think potentially over the course of the last year or two, there's been a little bit more adventure that's crept into it. I don't know if you're seeing the same thing, but people sort of slowly gathering that confidence. And what I've definitely seen this year is the sort of gasoline poured on the bonfire of digital transformation and cloud in particular, with people being more and more confident. So whilst you were saying there, the classic piece of, the fintechs and then the tier twos having that confidence to sort of move into different areas, I think that sort of proof of concept happening so regularly across the other area, and the necessity of this sort of perfect storm that's happening at the same time with COVID has meant that the adoption has been accelerated.
Yeah, I agree. And more to the point is that, there's 5-7 years ago, there's been like a lot of talk, is it like fintechs or the banks, and the banks, will be dead, which, I never bought that anyway. Banks are not going anywhere and they just getting stronger and stronger. But one thing that obviously the weakest point of the traditional banks has always been customer service. We all still go to the branch for some certain, transactions. There's like a ton of stuff you still can't do online. But I think what's definitely been happening more, as you rightly said, over the last year, it's no longer fintech versus banks, but it's kind of how can fintech or the technology companies really kind of cooperate with banks to offer better experience. So, and I think especially with the, this chat about whether it's JP Morgan or Lloyd's that are going to buy Starling, I think that's also, if that happens, that also will really pave the way for more open dialogue or collaboration between payments technology companies or indeed fintechs with the banks. They will kind of infuse more innovation into the traditional banks, and then the banks will be also it's going to be a win-win for everybody. So it's
I think you put a very interesting point there, talking about never having bought the fact that the banks were going to be disrupted, and I absolutely agree with you. But I think that the sort of game has changed from a little bit of combativeness of the disruptors against the banks to actually the banks saying, right, do we compete with that? Do we get disintermediated by customer service, or do we start to adopt it? And what I think we've seen over the last 5 years is a hell of a lot more of adoption of disruptive technology within the banks in exactly the way you've been saying.
Yeah, because the main underlying issue of disruptors is that although it's a kind of better customer experience, although it's like sort of account online, don't go anywhere, etc., but still, although we may all have like a Revolut or a Monzo account, but we all use it for specific purposes, right? Nobody has transferred their whole wealth, right, or some sort of like their life savings into one of these banks, right? So the trust is still with the traditional institutions, but everybody prefers the user experience of the the disruptors. So obviously, I think the better value for society is the marriage of the two, and I think we're kind of heading that way. Plus, absolutely. All these banks, all the disruptors are still not profitable, right? And you kind of keep wondering for how long can they survive not being. I mean, Starling obviously has become profitable this year, but it's only them, right? So.
Yeah, and it's been well publicised over the course of this year.
£800,000. Yeah,
great. So let's look a little bit about another aspect that you were talking about. Look, the company has the benefit, as you say, of a large geographical spread. This year, as we said at the sort of very top of the show, has been an interesting one from an economic, from a social, from a political, from a business point of view, and everything in between. So it's been a genuinely life-changing 12 months or so. You are in areas where you'll have seen that ripple happen fast and early, and almost be cured fast and early in some aspects of that, and dealt with far quicker than in the West. Tell us a little bit about what you've seen and where the predictions are, and what we can expect with bounces that have already potentially happened and started in the East, and what that means and what we've got in the post for 2021.
Yeah, look, I mean, obviously that's question's got like many levels. So I think if we kind of shift away from payments, big picture, I think next year is not going to be, an easy one either. I think we're still, I think the COVID reality is going to feed through for a better, maybe half of next year. So I think until the vaccine is really widely available, until they vaccinate like so many people that they can really relax the the lockdowns, the freedom of movement comes back. So I think that's going to be the kind of overall our life's reality for next year. What that means for for how you and me transact, of course, it's going to be the same trend. So e-commerce will keep booming, the online payments will keep booming, the on-premise transactions, not so great. The SME, small shop turnover, not so great. Hence the companies who, again, taking a step further into the payments, the companies that are in online, who operate a payment gateway, or whose clientele or whose business is only mostly processing the online payments, will be doing better than those who process, brick and mortar stores. Clearly, this year has shown a wider adoption of contactless payments. And I think, if previously a lot of, certain stratas of population were nervous about, online banking, about paying with a phone or with a credit card, sort of this year kind of were forced to do that because, you couldn't take a ride in a bus in London if you didn't have a contactless payment, right? So, so I think generally in the world, which has been quite eclectic in terms of contactless payments adoption, with some countries, almost cashless at this stage, whereas with some, still quite heavily reliant on cash, and we're also talking about countries like Germany and Japan. I think this year has definitely lifted the level of cashless, payment adoption quite high. And we will see that happening still, right? So, and hence I think for the company like ourselves or anybody who's in payments technology, there's just going to be a further pressure of innovating for the, yet more secure, yet faster, yet more seamless cash-free payment experience. So.
Yeah, I think that's really interesting. And you mentioned there, Germany and Japan. I've always been surprised when I go out to New York about the sort of backward nature of the payments out there in particular as well. True. And it's what's the catalyst that sort of allows that to move quick? Because surely that happens, right?
You mean the kind of adoption?
The adoption, absolutely, in countries that you mentioned.
Yeah, look, well, I think firstly, I think now this year there's been a lot of central government push in many of those countries that gave a lot of people more comfort in a way. So when I think, I don't know, in certain, I guess, emerging market countries, when the government tells you that it's okay to use, I don't know, a cash machine, or it's okay to, now you're getting your benefits, on your bank account, and you can't go to a bank. So please, figure out how to use online banking. So I think that's definitely an incentive. In certain countries like the US, for instance, the government aid partially was distributed through the fintechs. I think Square participated in that, and I believe Cabbage did as well. So that, in a way, gives more comfort, more trust of the population to those fintechs. Because again, like really the issue with adoption of or why it's so difficult to give up cash is just the security and trust, right? Here I give you money and you got the money. So me fidgeting with my phone and putting some sort of like, numbers here and there and transferring you the money, like some people, older population or more conservative population that will have issue with that, right? And I mean, obviously the international transfer, which also takes days. I mean, that's like, oh my God, right? So I think the catalyst is going to be even further. It's just like as soon as there is a bit more education, maybe government encouragement or some sort of centralized push so that the people also think, okay, that's okay, kind of my money is safe, even if I don't see it, I still have the money. I think that's going to be that's what's going to propel a next level of cash free payment method adoption.
Absolutely. And so let's finish by talking a little bit about what's next for you. It's as we say, there's opportunities in plenty of the areas that you've discussed about so far, and it looks like there's an exciting year ahead. This will come out right at the very start of 2021. Tell me about what you're looking forward to and what we can expect to see from the business.
Yeah, sure. So I mean, we're definitely in a full-on go mode. It's not a surprise that the payments market is really probably at its peak right now. So I think we're going to see, the deals that we're seeing, the interest that is there from the investors and just generally from population, towards payments companies is definitely very high. And I think it's a good time to really make, for us to really make a big push into growth. So for us, it's going to be the push of software as a service business, but globally. So we will roll it out more aggressively in the areas that we're present. So again, like Southeast Asia, big potential in Africa, in Middle East. So and that's going to be our focus really.
Exciting times ahead for you.
I hope so. Yes. I think exciting times for everybody. I mean, look, it's of course this year was not easy for the planet, but for us, actually, it was a good year from a work perspective. Just because, again, it's I think like many companies, we realized that we can work even probably better from from home or virtually. We're in a business of delivering kind of mission critical infrastructure to our clients, and we have managed to do that also remotely. We see the potential. I think in a way the team has also become much more cohesive. So I think it was a good year also to calibrate and think over your strategy, and hopefully next year when we do get our freedom of movement back, it's going to be time to execute, because still it's so much can be said for working over Zoom or meetings or Skype or whatever, but there are certain things that will never replace human contact.
Absolutely. I'm so pleased you finished with that, because it's been something I've been preaching in for weeks and weeks and weeks now, that there is opportunity in everything. And whilst there's been a horrific human sort of element to this, and economic and everything in between, there's also great opportunities. And I think there's going to be a lot of companies that end up, myself included, our business included, will be and is already a million times better because of what's
Sure.
happened, and better positioned and better strategy, and that thinking time, as you say, to sort of be able to readjust and reset and build. I think many governments at the moment are talking about build back better as a strapline for what they want to do. I think that opportunity has been there, and one of the things that I've noticed and love talking about from doing these all the way through this year and speaking to so many people across so many brilliant businesses, how many people have actually moved forward over this sort of time, and to hear you achieving that and being able to sort of, as you say, improve the the balance of the business in, to an extent, to improve the productivity of the business, and to be able to see something that we have been jolted out of to allow that to happen, I think is going to be one of the great legacies of this period. And I think we absolutely owe it to ourselves to make sure the legacy of this time isn't just doom and gloom, but something there which allows a reset and a move further forward. And
Yeah, no, I think my kind of main takeaway, just generally, or like a conclusion of this year, is that I think what we're going to carry on to 2021 and beyond. I think we have learned to kind of rule out what's not important. And I mean, personally, and also from professional perspective, I think, if previously we would jump on a plane just to go for some sort of a dinner with a quasi client or not a client, and then there was like a lot of, I think we kind of kept ourselves busier than we in a way should have been, in a way, right? So sort of, I think now people will be prioritizing, well, businesses and people will be prioritizing way better. I think all around will be more efficient and effective, cost effective. Again, just taking out unnecessary travel, because we now know that a lot can be done without it. And I think we will just value those meetings, and then when we do see people in person, that we're going to be so laser focused on them to make sure that we get exactly what we can out of them. So
absolutely, and very well put. So listen, I've enjoyed that immensely, and it's been great to hear about the opportunities.
Thanks so much.
There'll be people there who have want to pick your brains a little bit more about this, I'm sure, who are watching. What's the best way for them to get in touch with you?
Email, LinkedIn, sort of.
Easy to find. We'll tag you in and make sure it's there. We'll tag you in and make sure they can reach out to you. It's been an absolute pleasure, Jane. Thanks so much for sharing the time and educating us on all of that. And I loved that final summary there of the opportunities that lay ahead for us. I've got no doubt that it's going to be a good year for you in 2021 as well. So really appreciate sharing that.
For you. Thanks a lot.
Thank you so much.
Thanks a lot.
Thank you so much. Thank you all for watching. We'll see you soon in another episode of Fintech Focus TV. Thanks very much.